Guys, market top on April 26, 2019. Guys, it is so bullish out there. It is actually bearish. Here's what I mean by that. We're going to take a look at a bunch of charts showing you specifically why the market top has never been closer than now. Let's first examine what's happening worldwide. Take a look at the Hong Kong Stock Exchange right here. It is definitely a top right here, guys. Check this formation out right here, guys. It just hasn't to move higher. It has substantial move in the last 4 months, all the way from this 24,000 range all the way to the 30. It struggles to break above 30. If the markets here in the US stalls, it's definitely going to make it very difficult for Hong Kong market to rally. The markets are running out of fumes everywhere we look at. As the stop informations form, a definitely sign of a reversal is the relative strength decreases. When it's drawn a downtrend like that, guys, this is a divergence. When price action moves higher and some other things are pointing to a lack of strength in the actual underlying thing on the chart moving higher, the drop is near. So here's Hong Kong. It's about to drop. If Hong Kong drops, China drops, Nikkei drops, which is Japan, and other things, look, it's going to negatively impact the markets here. It's definitely not going to make it easier for the markets to move higher from here. Signs of an exhaustion gap are observed in European stock markets. Take a look at this chart of Germany. Hey, look at this. A gap up higher, another one. Look at all these crazy bullish momentum going on. But at some point, things are just getting way out of control. And this resembles a classic example of an exhaustion gap, meaning that the market is just making that final move higher before a significant pullback or a resemblance of a crash. So this is the time when you see this, guys, take a mental picture of this. As perfect as this uptrend looks, this is not the time to be a bull. This is the time to be a contrarian. Also confirmed in Japan. Guys, the markets in Japan cannot find a catalyst anymore to move higher. Look at this. There's a lot of stuff going on right here in the sideways pattern. On one way, you can look at it and say, oh, it's about to break out higher. But indeed, guys, the market is out of fumes. There's no further catalyst for this market to move higher. And if you compare these levels, we're at the same levels where we're sitting, in November and so on, when we're trying to rebound. The probability of the market moving higher from here is maybe 5–10%. The probability of it dropping from here is significant. Now, the reason Japan is so important because, U.S. futures overnight, they trade and resemble very much what's happening with the futures in Japan. This is why this chart is so crucial and important. Now, I know many of you will say, look, it's a perfect uptrend. Dude, don't mess with it. Guys, I dare to mess with it because opportunities like that, they don't present themselves very often. When you see this, guys, this is a recent example I'm going to give you. I'm not trying to dig out some examples when we predicted the market drop in October, November, December. This is recent right here, right now, guys. This video was just posted a day ago to our subscribers pre-market. And look, those that were fearfully taking this trade has had some substantial gains. Look, Domino's. What happens to Domino's after earnings? It goes to the moon and comes right back down to earth. This is exactly what this candle represents. We called it a failed rocket launch. It's a straight up bearish reversal candle here, guys. And what it really tells you that as the stock was moving higher, institutional investors were actually coming in and getting rid of the stock. Now, you wouldn't think that because if you're looking at the screen at Domino's, you would be like, oh my God, man, these things, look at this. It's up 30 bucks for the day. And where is it now? Guys, when you see this, I want you to take a very, very close look at this. When you see this on the chart, in 90% of the cases, it's going to lead to this right here. So when I released that 13 market moves, which we typically post daily with all the trades and the 13 market moves analysis. When I posted it yesterday, I made that video available public, had a lot of comments. People like, oh man, you're talking about shorting this thing. Look at this thing going. Man, somebody posted, look, it's just broke 300. What are you doing? I'm adding puts, dude. This is what I'm doing because, again, opportunities like that, they don't happen very often. You can almost take 80% of the stocks right now, they're revisiting the levels that happened right before the crash, okay, in October, November, December. They hit the same levels of much lower strength That tells you that this move is not sustainable, guys. The reason I'm bringing this Domino's example, because first, I want you to acknowledge how Domino's looked when the price was moving higher. Second thing, I want you to understand what happens next, which is this. Next, I want you to focus, guys, on a few simple charts. Facebook, after announcing earnings, what does it do? This is how the chart of Facebook looks now. Gap up higher, after multiple gap up higher, and guess what's going to happen next? Tomorrow on Facebook, we're going to see this. Next chart. Microsoft. What do you see? Do you see that these bearish reversal candles are happening in the top stocks? Guys, when I was looking at my screen pre-market, I could not believe it, because behemoths like Microsoft and Facebook, they take a large percentage of the actual index. So they typically, when they move higher, and they are moving higher like crazy today after the earnings announcement, they would have a huge impact on the indexes. They would literally, I mean, between Facebook and Microsoft, by themselves on the moves that they're making, they could have taken the markets higher substantially, okay? Especially NASDAQ, right? I mean, they would have taken the market substantially higher, but we've seen a huge divergence this morning. When these stocks were rocketing higher, which would typically have an insanely positive impact on the markets, guess what the markets were doing? They weren't doing shit. Absolutely nothing. As a matter of fact, they were barely struggling to stay afloat. And you know what happened once we opened? We started selling off on bigger volume. So take a look at this candle in Microsoft, and remember that the next move is not going to be a move higher. It's going to be a move that's going to look like this. Now, the size of the candles may look different, because clearly, I mean, Domino's, we're in the 280s, so the candles are going to be more pronounced here. In some of these stocks, I mean, lower prices, right, 120s, the candles are not going to look as big. And, of course, Microsoft has lower volatility than some of the other stocks there, so the daily range is going to be lower. But please try to understand the main point here. Look at this. This is a cloud play. This was what we were posting to subscribers earlier this morning before the market opened. Said, look, the probability that this cloud stock is going to break above 270 is very unlikely. So we're buying 265, 270 puts, 260 puts in this name here. Now, for those of you that have been following like the workday trade, the CRM trade, guys, nothing has changed as far as our short theory on shorting the stocks in the current market. And the very thing that's going to take these stocks down, guys, I'm going to post it in the next video. We got a strong catalyst announcing earnings after market, the one and only stock that can take all of these things down in the same fashion in this reversal trend pattern that we're noticing in 90% of the stocks. So what is this particular cloud stock going to do next? Guys, remember, the next move is lower, not higher. And when you combine all these things that I'm trying to show you guys, this does not equate to a market move higher. This equates to a failed breakout. A failed breakout that we've been posting on our channel over the course of the last weeks, trying to warn everybody that this is not the time to be bullish. This is the time to be a bear. Look at this one, Align Technology. Do you guys see the resemblance in these candles? Another one bites the dust, goes to the moon, comes back to earth. What is the next move? The next move is lower, not higher. So here's the deal. Financials are out of fumes. Like just a few days ago, the whole world was bullish on JP Morgan. And look now, it's creating a topping pattern here. The next move is not higher, it's lower, guys. BLK, another financials. Do you see this? Do you see this bearish reversal candles? The next move is lower, not higher. Look, guys, it's the signs of the top are so well defined here. We're noticing even profit taking in some of the top stocks that have been highly favored by institutional investors. When institutions take their money out, you don't want to be caught up on the call side of your trade. When institutional investors take their money out, it doesn't matter how good the stock is. If the money's flowing out, guess what's going to happen to the price? The stock is going to drop. So here it is. Top institutional favorite stocks. XLNX. Check this out. They've been buying the hell out of it. for the last few months. It topped out at 140. Do you see this bearish reversal candle right here? What happens next? Boom, it's down 23 bucks before you know it. CMG. I mean, everybody and their mother-in-law has been bullish on CMG for the past few months. What happens? One top, two top, three tops, four tops, down 35 bucks. Guys, they're taking the money out of the stocks that they've been putting their money in over the last few months. Now, what is notable is they're taking money out on huge volumes. This sell-off volumes, they exceeded the buy volumes for the course of the last couple of months by far. Now, here's another sector. It's about to bite the dust. Guys, it's semiconductors. If you turn on your TV, all you're going to hear, buy semis. Oh, man, it's the top performing sector. Please understand one thing. By the time they tell you to buy it, they're actually selling. So you don't want to be buying this sector right now. You want to be doing exactly the opposite. As a matter of fact, that was another trade that we revealed to our subscribers for the 13 Market Moves Daily Analysis. Is we noticed that semiconductor sector is getting a bit exhausted. And so while the market has actually been moving higher over the last few days, this top name in semiconductor, AVGO, it's been consistently going lower. Divergence? Absolutely. Other indicators saying the money's coming out of the stock. Got bearish MACD. Guys, this thing is about to go lower. Micron Technology. I know a lot of you guys trade Micron. We personally don't. But the charts, guys, the chart is insanely. Look at this. 1, 2, 3, 4 tops. It's a multi-top formation. I've shown you what happens when you see this candle. The next move is lower. And here's another interesting observation, guys. No, we're no longer looking at the chart of Micron. This is actually copper, which is an indication of the future economic activity. And it's, guess where it is? It's at the top. It looks identical to Micron. Now, wouldn't that be interesting that if the price of copper is hesitant to break out higher, what does that tell you really about the future economic growth worldwide? What does that tell you in particular about Chinese future economic growth? And the news, they clearly tell you that things are getting better in China, so that would be a reason to buy stocks, to buy copper, not otherwise, but we're clearly seeing the top information, which coincides with the top information in semiconductors. So while they're telling you to buy, guys, we've nailed the top in this next stock right here, LRCX. Guys, you can go with the video somewhere on the channel. I posted it, goodness, almost 11 months ago when this thing was trading at the same level it is trading now at 204. We were shorting this all the way until it got to this 130 level. So yes, we nailed this $70-some move, and right now we're telling you that this thing is about to reverse again and move lower as the rest of the semiconductor stocks. Now, you're not going to get that by listening to all the media out there because they're incredibly bullish. But charts don't lie, guys. Look at this candle. This is not a coincidence. These semiconductor stocks are about to reverse and begin their way lower. Now, here's the killer. At the same time the market is forming its top, VIX is forming its bottom. VIX actually has got exactly the opposite going on. It's got a bullish reversal candle right over here. And for our 13 Market Move Daily subscribers, we posted a video today saying that, hey, it's actually going to move all the way to the 16 range over the course of the next 2 weeks. So from 12 all the way to 16, that's a pretty decent move, guys. It's a very simple trade. We think it's going to top out right around this area right here. 1, 2, about 16, 17 level. That's quite a bit of move right here. 30% move higher in the VIX when nobody really expects it. That's a pretty good trade right here. VIX calls, guys, that's a very simple trade. Better trades out there in some individual stocks. And if you're trying to find out what they are, guys, if you're not subscribed yet to the 13 Market Moves Daily, if you're trying to understand how to read charts, take the courses, then subscribe to the 13 Market Moves Daily so we can work for this together so you can make this year your best trading year ever. Guys, let's rock. Take advantage of this market. There's just too many signs of the market top out there, guys. The drop-off is near. If you're not sure how to make money when stocks drop, click the links below and get more information today. Don't wait till tomorrow. Life is too short. Make it happen now.